Hello, good morning. Welcome to an exciting day to talk business. My name is Blyden Ukem and it's Business 360. In Business 360 today, we'll look at the key features in the world of business. We'll get to talk about the enabling factors and the excitement making rounds, particularly with gold. The big question is why central banks continue gold buying spree. Since 2022, central banks around the world have been buying gold, and they're not stopping in 2023. After charting the highest level of net gold purchases on record in 2022, central banks are back at it in 2023. Central banks globally added another net 77 tons to their gold reserve in January, according to the latest data compiled by the World Gold Council. It was a 192% month-on-month increase from December and above the 20 to 60 ton range of reported purchases seen over the last 10 consecutive months of net buying. A late report of a 45-ton gold purchase by Singapore in January pushed the numbers up from the initially reported 31 tons. The Central Bank of Turkey was the biggest buyer in 2022 and continued to add gold to its reserve with another 23-ton purchase in January. Turkey now holds 565 tons of gold. According to the World Gold Council, there are two main drivers behind central banks' gold buying: its performance during times of crisis and its role as a long-term store of value. Well, not many individuals get to know the value of gold as a store value, but central banks are doing that around the world. At a time of economic instability, global support for globalization has declined in many countries. Trade tensions have risen. The future of multilateral governance framework remain uncertain. On International Women's Day, European Central Bank President Christine Lagarde joins World Trade Organization Director and General Dr. Ngozi Ogonjo-Iweala in an inspiring and wide-ranging conversation on women in the economy. Let's begin with the World Trade Organization Director.
And food prices, with the existential threat of climate change, I think we've been set back. And actually, some of the numbers bear this out. I think in 2020, before the pandemic really deepened, the World Economic Forum had estimated the amount of time it would take to get gender equality or gender parity to be 100 years. After given all these crises, the latest estimate is 132. So we've been set back 32 years already. 100 years is so difficult to imagine that my granddaughter's granddaughter, would be there and we may still not have gender equality. But now it's 132 years. The World Bank has estimated that 70 million people have fallen into absolute poverty because of this. And the Oxfam is saying that 47 million people in poverty are women and girls. So when you look at all of this in terms of impact, I feel we've been set back, and it's going to take...
That was Ngozi Ogonjo-Iweala speaking about gender inequality and how it has led to poverty level around the world. Let's also listen to Christine Lagarde, President of the European Central Bank, regarding this.
It is fragile and it can be derailed. Can we catch up on those 30 years that we've regressed?
What I would like to do first is in a way pay tribute to our grandmothers and our mothers, which have gone a long way to where we are now, which is way too far away from where we want us to be, our daughters and granddaughters to be. So we cannot turn our back to what has been done. My mother, for instance, could not open a bank account without my father's authorization. That's just a minimum. And when you look at the level of education in many economies, girls had zero access, limited access. There is progress, not where we want it to be. And girls are still discriminated compared with men or boys. For the advanced economy.
That was Christine Lagarde of the European Central Bank regarding the opportunities for the girl child. Japan's lower house has endorsed the appointment of economist Ueda Kazuo as the new governor of the Bank of Japan. Ueda, a former Bank of Japan policy board member, is to replace Kuroda Haruhiko, whose term ends on April 8. The lower chamber also approved the government's two nominees, Himeno and Uchida, for the central bank's deputy governors. The upper house is to vote on a nomination on Friday. Talking about different outlooks, we'll be moving to Grayscale Bitcoin Trust issues. The Grayscale Bitcoin Trust discount to net asset value has fallen to its lowest level in a month, ahead of oral argument in federal court relating to Grayscale lawsuits against the U.S. Securities and Exchange Commission. Grayscale and Coindex are both owned by Digital Currency Group, DCG. Coindex Global Policy and Regulation Managing Editor, Nekhilesh De, discusses what to expect. Let's hear from De.
Market ETFs mean that the SEC has kind of picked a specific product, but it's being inconsistent in how it okays these types of products. Basically the argument being that if you can easily manipulate the Bitcoin spot market prices, what's stopping you from easily manipulating Bitcoin futures market prices? The SEC, for its part, is going to argue that they're very different, that spot market products are based on spot markets. They're based on Bitcoin, whose price is going to trade on exchanges, some that are in the US, some that are not, some that are regulated, some that are not. Whereas Bitcoin futures ETFs are based on products that are settled in cash and traded solely on CME. It's going to be, I imagine we're going to hear a lot about the way these types of products are structured, about surveillance sharing agreements or market manipulation concerns. And in case of he doesn't know what the SEC is doing in terms of timeline. So the context here is, of course, Voyager and Binance US have been, in a multi-day hearing at this point to decide whether or not the court should approve Voyager's restructuring plan, its bankruptcy restructuring plan, to sell itself to Binance US. Now, the SEC has objected on a couple of different points. One being, it
would be a good time to look at the state of African businesses. African airlines have recorded a 124% growth in passenger traffic in the past year, according to the International Air Transport Association. The Switzerland-based ITA, which represents international airlines globally, said the recovery in air travels and its demand was continuing in 2023 based on January traffic results. Globally, traffic is now at 84.2% of January 2019 levels, with domestic traffic for January 2023 rising up to 32.7% compared to the prior year, according to the airline body. It adds that the growth was aided by the lifting of the zero-COVID policy in China. From a Nigerian point of view, the Nigerian National Petroleum Company Limited has said a total of 339 million liters of petrol was distributed to 63 depots across the country in 7 days. NNPCL and the Nigerian Midstream and Downstream Petroleum Regulatory Authority on Monday showed that the products were sent out between February 25th and March 3rd. According to the weekly National PMS Evacuation and Dispatch report, 339 million liters of petrol were distributed across the states, with Lagos getting the lion's share of 1.73 billion liters. Delta State received 610 million liters, Oyo 531 million liters, and Ogun had 441 million liters within the period. Group Chief Executive Officer NNPCL Male Kyari had last year said Nigeria consumes 66 million liters of petrol daily. However, fuel scarcity resurfaced in some states, including Abuja, this week. Talking about Nigerian outlook, consumers of goods and services and companies paid 5.34 trillion naira as taxes to the government in 2022. This represents a 42.14% increase from the 3.76 trillion naira that was raised in 2021. The 5.34 trillion naira was raised from value-added tax and company income tax. According to the National Bureau of Statistics, the manufacturing, information and communication, mining and quarrying sector were the largest contributors to local VATs. It would be a good time to look at global economy, what the perspectives are in other climes, including Africa, regarding economic outlook. We begin with China. China's inflation lowest in a year. China's annual inflation rate fell to 1% in February 2023 from 2.1% in January, missing market forecast of 1.9%. This was the lowest print since February 2022, with prices of food and non-food slowing sharply as consumers remain cautious despite the removal of zero-COVID policy. Meanwhile, producer deflation extended into a fifth month. Talking about inflation in China, let's move to the charts indicating this. The chart giving an outlook of inflation in China year on year. According to this chart, as of April 2022, inflation in China was at 2.1%, but it kept going higher and higher to 2.7% in July 2022, before peaking at 2.8% and slowing down a bit since then at October 2022, 2.1%, and further even 1.6%, but it went back up as of January 2023 to 2.1% and dropped to 1%, indicating a good picture of the economy in China and signs of good things to happen in the economy. Back to Africa, looking at African economic states, the state of Egypt. Egypt's inflation rate is at the highest level for nearly 6 years. The annual urban inflation rate in Egypt further accelerated to 31.9% in February 2023 from 25.8% in the previous month, and well above market expectations of 26.9%. It was the sharpest inflation rate since August 2017 and stayed above the upper limit of the central bank's 5% target range for 1 year, largely due to a weaker pound. But amid the concerns of Egyptian pound, main upward pressure came from prices of food and non-alcoholic beverages at 61.8% against 48% in January, by far the most relevant in the consumer price index baskets. On a monthly basis, consumer prices rose 6.5% in February, the most since October 1989, from 4.7% in the previous month. Let's move straight to the chart to have a broader perspective of inflation in Egypt, the chart. According to the chart indicating Egypt's inflation, 13.1% was the rate in April 2022. It was at a steady pace till July 2022 at 13.6% and began to move upward. As at October 2022, it hit 16.2% and the trajectory was upward and upward. In January 2023, it went to 25.8% and in February, 31.9%, indicating a higher cost for commodities in Egypt as well as a weakness in the value of the Egyptian pound. At this point, we'll go on a short break. When we return, we'll look at the commodity markets and the outlook within it. Don't go anywhere. Welcome back. It's Business 360. My name is Blyden Okem. We'll begin to look at the metal markets, the market commentary with Todd Colvin. But gold reverses higher and closes above $1,815. Let's hear more outlook from Todd Colvin.
Mr. Powell, in his semi-annual testimony to the Senate Banking Committee, we saw gold move lower yesterday. Today we saw it reverse higher, get back all the way up north of 1820. However, things didn't stay there. We actually reverted lower. We got back to unchanged on the day, so hovering around 1815 to end the session. Ultimately, gold will be watching and listening to what the Fed does. Fed Fund futures now pricing in a more aggressive 50 basis point hike at the March meeting later this month, with the possibility of more hikes to come. down the road in May, June, and July. So the higher rates go, the less attractive gold looks, as gold is a non-yielding instrument. So after seeing a move higher off the lows from yesterday, gold ends up settling very close to unchanged, hovering right around 1815. Now, what does this have to do with volatility? Well, if you check out that CVOL index over at cmegroup.com, you'll notice that volatility, while it has been trending lower, has seen a modest uptick. And today we did see a modest uptick. A lot of uncertainty out there as we kind of peel back the onion, so to speak, on what the Fed chair talked about. Likewise, with the dollar moving higher, it could create some obstacles for any upside move in gold. So volatility slightly higher today after the Fed chair spoke. Lastly, let's talk about what we have.
Thank you, Thought Calvin. But amid all the struggles and the perspective from the Fed regarding possibilities of high interest rates, the market has been responding in different ways. Let's move to the metal market to see what the outlook for these metals are. The metal market. The metal market has shown some positivity for some of the commodities like gold, silver, but there are struggles for copper. Copper is struggling a bit, but not reasonably much. For gold prices, $1,816 per ounce. Slight upward movement this morning by 3.43 points, a 0.19% appreciation. For silver, it's $20 per ounce, and no significant appreciation this morning, just a slight one. Copper slightly downward, steel upward by 20 points, 4,255 Chinese yuan per ton, a 0.47% appreciation. Let's look at the energy market, what the perspective of the energy market is. For crude oil, the US crude, or WTI crude, which many would call it, $76 per barrel, upward by 0.04%, 0.06%, and 0.049 point appreciation. For Brent, which is Nigeria's price benchmark, is $82 per barrel. Slight downward this morning, a downward movement of 0.115. Market is moving fast, a negative 0.14% depreciation. For natural gas, not much high movement, but a 1.57% appreciation. And gasoline, heating oil, a little here, a little there, and that's the outlook within the market. Let's have a look at the agricultural perspective, the agricultural market. Soybeans, upward this morning after a slump yesterday to 4.5 points, a 0.29% appreciation. Current price $1,531 per bushel. For wheat is $676 per bushel, upward by 2.14 points, a 0.32% appreciation. For lumber is slightly downward by 1 point, and palm oil upward by 24 points, 4,204 Malaysian ringgit per ton. The agricultural market is at least moving forward a bit this morning. It would also be a good time to look at the forex market, the foreign exchange market, and what's happening within that sector. Bob Icino will give us a commentary on this one. But Canadian dollar futures sank nearly 1.5% over the past 3 sessions as the Bank of Canada leaves interest rates unchanged. Let's hear more from Bob Icino.
Dollar futures, which over the last 3 sessions is in the midst of a 3-day drop. The Canadian dollar future has dropped around 1.5% over those 3 sessions. The largest move of those 3 days was yesterday with a little over a 1% drop, but today was also respectable, and both days have substantial volume to the downside. Today we were down about a third of 1% in toward the close. We were down 0.4% on the lows. That low is 72.38.5. That's of course versus yesterday's settlement of 72.67.5. And that move overall obviously closed lower, closer to the lows than to the highs. The highs 72.75.5 was only up about 10 basis points. Now, after being up almost 2% on the year, the Canadian dollar is now down over 2% on the year, about 2.08% with today's New York close. Now, Jerome Powell.
Thank you, Bob. Amid all the highs and the outlooks within it, let's move to the market itself to see the perspective of the euro against the US dollar and the US dollar against other measures, the market itself. The morning market has shown some slight positivity for euro against the US dollar, but it hasn't left the 1.05 mark. The struggle has been there over the past 2 weeks for the euro against the US dollar. For the pound is a similar story after dropping from the 1.2 US dollar mark its current point, it's 1.18 US dollar equaling £1. But slight movement this morning for the Aussie is the same story this morning. Let's have a look at the energy within the Nigerian market, the Naira against the US dollar. The US dollar against the Naira, it's still at that ranging point of 459.9 Naira equaling $1. No changes over the past 1 week. Is that being the situation? For the Euro against the Naira, a downward movement for the Euro against the Naira of 0.39 points, a 0.08% decline, meaning a slight gain in the international exchange window for the Naira. For the pounds against the Naira, the pound is gaining by 0.57 points, a 0.1% appreciation. Current price 544 Naira equaling £1 at the international and exchange window. Let's go to the black market to see what the parallel market is saying regarding Naira. The energy within the parallel market. At the buying rate, if you are dealing with dollar to Naira, the buying rate is 753 Naira to $1 and selling rate 747 Naira to $1. If you are dealing with the pounds in exchange with Naira, buying rate is 930 Naira equaling £1 and selling rate 910 Naira equaling £1. For the Euro to Naira, buying rate is 795 Naira to €1 and 775 Naira to €1 if you're selling it. Good time to look at Bitcoin, what the digital currency is after going through the fiat. Bitcoin keeps struggling after hitting the 25 mark over last week, some 8 days ago. It's been the struggle for Bitcoin, downward this morning by 359 points, a negative 1.63% decline. There are speculations about Bitcoin even going further, but we can only wait for the outlook of the market moving forward because decisions making by investors are up and coming likely. For Ether, the struggle continues, 1,532 US dollar equaling 1 Ether, downward by 19.77 points, a negative 1.27%. It's a little here, a little there for most of the cryptocurrencies. Binance is slightly upward by 1.7 points. Let's move to the Asian market to look at what the stock market is. The Asian equity market will mix today as caution dominated sentiment amid expectations that the Federal Reserve will raise interest rates further, quite concerning from all outlook of the market. The point that Federal Reserve can raise interest rates. Investors also digested data showing China's inflation rate dropped to a 1-year low in February, while Japan's economy stagnated in the fourth quarter. Meanwhile, the Bank of Japan is set to decide on monetary policy on Friday in what would be Bank of Japan Governor Haruhiko Kuroda's final meeting. Shares in Australia and Japan advanced, while Hong Kong, mainland China, and South Korean stock fluctuated. Good time to look at the Nigerian stock market then, in conclusion of what happened yesterday, giving a picture to what could happen today. Investors with shares in Transfer Express, Curtis, and other equities benefited from the positive output in the Nigerian capital market on Wednesday. After 5 hours of trading, the market capitalization rose by 0.37% or 118.5 billion naira from 30.28 trillion naira to 30.39 trillion naira. Similarly, the all-share index appreciated by 208.36 basis points to settle at 55,801.14 points. Investors traded 152.74 million shares, valued at 3.57 billion naira in 3,293 deals. Let's look at the top gainers in this one. Transfer Express led the gainers list with a 9.88% rise in share price, moving from 81 kobo to 89 kobo per share. The bottom losers. MRS topped the losers table after shedding 3 naira 10 kobo to drop from 31 naira 5 kobo to 27 naira 95 kobo per share. The top volume. Cotville led the day's trading with 34.6 million shares, valued at 16.6 million naira. This is where we end today's edition of Business 360. My name is Blyden Nukem. Thank you for watching.